Hey guys, Value Venture Investing here today. So we can see that Apple's taken a bit of a run today. So you might be wondering, what happened? First things first, let's take a look at the stock today. Wow, it was really on a tear today. At one point, it was well up over, I believe, 6%. It closed up about 4.9%. So a great day. Great day for me as it's my major, as you guys know, it's my major position that I hold. So you're probably wondering why it's up. It's obviously up due to earnings, but there's specific reasons I think that it's up, even though the earnings weren't amazing in terms of what is traditionally expected from Apple. So this is going to be a really quick video today. I just wanted to kind of give you guys the information that I've curated so you don't have to go out and find it. Give you a really quick thoughts on my thoughts on it, and we'll go from there. So Q2 2019. So the big news here was that after the last quarter, expectations were pretty low, right, guys? I wasn't even really watching this quarter. There's no new products. There's no new services, although I am watching services very closely. So it was supposed to be a pretty bad quarter, and we did see things being not the best. So revenue estimate was $57.49 billion, but we actually saw $58 billion. So that was a beat. It was down 5% year over year, or I believe that was from last quarter. We'll look at that in a sec. But the big news here is that they actually did beat. So that's why it was positive, even though we've seen this revenue slip a little bit because of what's going on in China. EPS again is being a strong point. The estimate was about $2.37. But the actual was about $2.46. Now that's obviously bolstered a lot by Apple's buybacks because they're buying back a ton of shares. Cash is now about $225 billion. I've talked about that before. They're aiming to be cash neutral. So basically right now they could easily, eliminate all their debt. There's different reasons, strategic reasons why they have their debt. And still have over $100 billion, but they want to really implement their cash in a productive way, which is good. So they also announced $75 billion more for share repurchases, so that's going to aid in that as well. Dividends up 5%, I like that, to about 77 cents per share. This is something that's been consistently going up. Now when we're talking about the actual unit sales, they don't break down specific unit sales anymore. But they do give revenue, and we saw that iPhone down 17% year over year. So that's 5% drop was actually from last quarter. So 17% year over year. That was the big news, but that was expected. That was baked in. So it wasn't quite as bad as we thought. Tim Cook also said that it looks like it's getting better. A lot of this has to do with trade talks. A lot of this has to do with big part of it has to do with currency risk that's hurting them. But I think, like I said to you guys before, that the prediction that I have is that this is not going to last this way. I don't care about iPhone so much, but I don't think it's going to last. We'll get into that a little bit here. iPad's been on a tear, up 22% year over year, and this is the best in 6 years. And that's a very high margin business as well. But this is all about this installed base. That's important. We'll get into that in a little bit. Mac was actually down slightly. Now, they blame this on the conference call due to a processor constraint. I'm guessing this is something to do with meeting demand with customers, but they didn't really go into it too much. It's never been really significant now, considering they're transitioning away from it. But basically, they said Mac would be up if it wasn't for that. Wearables. This is the part that really, excites me more than anything. Up again, nearly 50%. Like, if you watch my last couple videos, last videos, like every year it's up like crazy. Same with services. And we'll get into that when we look at the actual financial statements here, because I forgot to write it on here. But the big thing is 390 million paid services amongst all these things. And with an active installed base of over 1 billion, I see some potential there. Why was the stock up today? I think the biggest reason was guidance. So the estimate was about $52.2 billion. However, Apple guided 52.5 to 54.5. So even on their low end, and they're always conservative with their estimates, they would still be beating the estimates. So basically things are getting much better, and that's why we saw the stock go up. So let's take a quick look at the financials. There's just a couple things that I wanted to go into, show it to you guys. There's not too much here, but let's take a quick look at the financials here. So as we can see here, yes, we saw the products go from over $51 billion a year ago to to a little over $46 billion. So when you're going down the line items here, we saw total net sales of 58 versus 61. So, you know, definitely down, but not ridiculously bad or anything like that. I would expect to see variations with the company, but I guess it's just not, it's just not acceptable with Apple. That's always been up. The big thing here was services. We see costs of services going up. So we know that services itself is doing phenomenally. And if we do look at services down here below products, it's up of over $11.4 billion from over $9.8 billion a quarter ago. This is where we're seeing the growth, and this is where the install base is very important. So adding all that in, going down the line items, we won't go through anything. Net income was about $11.5 billion. So not ridiculously horrible from last year, but definitely down. EPS is down there as well. Now looking at net sales by reportable segment. Now this is what's kind of interesting. Of course, we see China, Greater China, getting hammered here, 13 billion down to 10 billion. But Americas is actually doing very well. And this is a very high margin, a very good area for Apple to be in, but obviously they want to transition out to third world countries, developing countries, things like that. But I thought that was at least promising to see the growth in Americas, even though it was down in Europe, Greater China. Japan's been doing well, slightly up, but basically everything else was down. So the total net sales are about $58 billion. Again, going down here, net sales by category, we saw iPhone drop there from 37 billion to about 31 billion. We saw a slight decline in Mac, but like I said, that was associated with some supply constraints, it seems. iPad was up over $800 million from a year ago. So that's, again, very impressive. And my two favorite categories, wearables and services, look at that growth. I mean, wearables went from, has been growing phenomenally, from 3.9 billion to over 5.1 billion, and services just skyrocketing, 9.8 billion to over 11 billion dollars. So as I've always said to you guys, I really think the future with Apple's with these services, we haven't even really seen anything in this quarter in terms of new services that are being developed, that are in the pipeline, that they've announced, like Apple TV Plus. And with only 300 million paid services, I think there's a lot of room to grow there. iPhones are not dead either. I believe that will come back as well. But I think the main takeaway from this is that Apple is transitioning into more of a services company, like I've said before. I believe it's about 20% of the revenue now. So analysts are starting to look at it and go, well, what kind of multiple does Apple deserve, right? And generally speaking, a services company like Microsoft or something commands a higher multiple. So if Apple still stays at these low levels, the question is why, right? So this is why it's going to be very interesting to see how Apple implements these services, what kind of revenue they can generate from them, the margins, which are actually generally speaking much higher than the iPhone margins. That's why it has a higher multiple. And go forward and see how the stock responds. So I just want to do a quick video for you guys. I didn't want to go into it too much today. Hopefully this was helpful laying it out to you guys. I'd like to know what your thoughts on services versus hardware unit sales. Do you think this is good, Apple? Specifically also, do you like what they're doing with their cash? I mean, the way that they're implementing it, should they be buying more companies? Sometimes I wonder about that as well. So anyway, don't forget to subscribe and like, guys. That's going to be it for today, and I'll see you in the next one.